Jason Snipe, I want to ask you the question this way, I guess, because, everybody wants to sell when the market's falling out of bed and it looks like it's going to go down and you want to preserve the capital you have, and then it goes down a lot. And then you never know when that moment is to get back in because you're too afraid to do so because you think it's going to go even lower than that. So my question to you is, how are we going to know? How are the viewers going to know when it's the time to buy? Beyond looking at just the HeartNet levels, right? You can throw any level out there and say, well, when it gets to that level, that's the signal. But it needs to be deeper than that. Do we need to see energy prices come down? Is that it? Do we need to see a clearer sign overall that inflation has peaked? Do we need to wait to earnings and see what the guidance is going to be? Do we need to wait and see estimates really come down because they have not? Do we simply look at oversold conditions and suggest, well, stocks are cheap, 40% of the S&P is at a 52-week low? What's the signal?
Yeah, so I honestly think it has a lot to do with CPI. I mean, inflation is the raging storm that we're all dealing with as investors, as managers. I think that is the big deal here. So we've talked about peak inflation. Clearly, we've been wrong. At least I've been wrong on the panel talking about that. So I think as inflation begins to moderate and abate some, obviously you're seeing a little bit of that in core. But energy and food pricing, that's where the numbers are really coming from, and shelter costs as well. So I think when that starts to abate some, I think then you will feel more comfortable in terms of moving into the market. But I'll also say in my other point, in terms of just dollar cost averaging into the market, you don't want to wait until all of these things happen. I think we could start to see some signaling soon, hopefully in the next couple of quarters. But I do think it's appropriate now to start to dollar cost average into the market if you have some cash on the sidelines and look to greener pastures ahead. And even though that might take some time, but I think you should be looking at that as an investment strategy.
See, the problem with my list, whether it's energy coming down, whether it's clear sign inflation is peaked, whether it's earnings and guidance, and then estimates coming down, you don't get good answers to those questions for a couple of weeks. There are no great data points coming up for a couple of weeks, either on inflation, PCE, CPI, earnings start in July. Maybe you'll start to get revisions when, the rubber meets the road, reality sets in for those who refuse to do it so far. How would you answer that question? What's the moment? It's not an exact science of just looking at levels. What is it?
Right. I would say that in agreement with the commentary about oil and the price of oil, I think that right now is by far the biggest component of what we're looking at here, because it's not just us at the pump, Scott. It's all those places around the country, and we hear about it all the time. Transportation costs, fuel costs, diesel fuel, all of that. And it cascades into just about every part of the rest of our lives, right? Whether it's grocery items, whatever it might be. It is affecting things in a monstrous way right now. And that, I think, is the reason why we have to see a sustained move to the downside. And I think for instance, crude would have to be well under 100. And I think it has to be sustained under there. We've pulled back before only to just return right back up to 120. So it's not like we can just sit there and say, oh, it's under 100, here we go. I think that is the biggest issue right now, because when we looked at that CPI number, it was something that was jarring for everybody. And certainly we saw exactly how the markets reacted to that. And most of that, everybody says, it's going to be, fuel and food. Well, it's really more on the fuel side of things, and all of the different components that brings. So that's the major one that I would be looking at for any kind of a turn. Now, those turns do take a little bit of time, Scott, and it's going to take a little bit of time for something like this. I think we'll get some, very volatile moves, of course, but that's why we're seeing volatility kind of creeping a little bit higher, holding around that 32 level. 40 is not as big a deal to me as it is for the rest of the world. I think it's just a matter of the velocity of that move. Does it spike and then pull back? Or what is the move that we're going to see that's actually going to be that move in volatility? I think it's not something that's going to sustain very long if we do get up past 40.
See, Degas, too, we can't answer the question of soft landing for a while. If that's what this is all about, if that's what the whole debate in the market is about, whether the Fed's going to break something on the way to try and fix inflation, we're not going to have true answers to that for a long time. Jeremy Siegel told me yesterday in overtime he already thinks we're in a mild recession. Bullard of the Fed says a soft landing is feasible. We're going to wait until we have more definitive answers to that question before we deploy money in this market?
Scott, you have to deploy money now. And so, because every day you should be looking at the market. One of the things that we've noticed is that as the companies' multiples come back down, we're looking at a 10-year average. But you look at a 10-year multiple before the pandemic. That's when you start really measuring, because we're saying that, for instance, Apple's at about a 19 multiple now. Before the pandemic, the 10-year average for Apple was 15. That says Apple could come down a little bit more. Likewise, Microsoft is at a multiple right now of 23. 10-year average pre-pandemic was 25. Microsoft is a little bit closer to where you could actually buy based off a multiple. That's how we're looking at this market. Plus, we're looking at estimates revisions.
Okay.